Welcome back to Bazaar Morning Call. We have plenty of stocks to discuss, and our man of the moment is Prakash Diwan, who joins in to give us his views on all that's been happening so far. Prakash, good morning. Thanks for joining in. The first stock I wanted to ask you about was Paytm, because it just came out with their data for this month gone by, and it's looking very good. The number of loans disbursed have gone up over 200% year on year, and the value of loans have also picked up 32% on a quarter-on-quarter basis. I know this is a stock that you've not really liked too much in the past, but from here on, how does the risk reward look?
Good morning, Sonia. So you're absolutely right. I think the turnaround seems to have got triggered, but you need to understand that these things can get disrupted very easily. It could not be a linear growth trajectory that they could clock. So if there is another quarter which endorses the fact that this seems like a trend where other things than just the payment gateway is started to yield and contribute to the P&L, which is what we always thought was important for this company to justify or sustain valuations. I think there could be a re-rating which can be ferocious. Now, how quickly people get in will depend on the overall mood of the market at that point in time. Right now, the mood of caution that prevails, Sonia, there's going to be a little bit of a challenge, even for good news to get followed through in terms of buying. So I would reserve my distinct enthusiasm at this point. But it's great to see a large business like this finally seeing some sort of a turnaround, because there's so many shareholders, especially small retail shareholders, who've been disappointed in this stock, and that could be some sort of a respite for them coming their way. So quite positive, but I would, before buying into it or recommending a buying, I would wait for another quarter to see this follow through.
Well, morning, Prakash. What was encouraging as well is over the weekend, I bumped into you at an investor meet Saturday morning at 9 a.m. and, investors were full throttle in there. That goes to show the kind of interest that's there in the markets for, all those smaller companies as well. But that's a side note. I want to ask you about two stocks, JP Group stocks as well as Suzlon. Both those two shunned away, were part of the Nifty at one point of time. But now there are some corporate developments. Any view on Suzlon? We know the stock went running up and now it's corrected back to around that 7.5 rupees. There's an impending rights issue as well. What's your view on that one? And JP Group, that could be a tricky one for shareholders, right? The stocks have already run up a goodish bit, and maybe the shareholder ultimately doesn't get anything. That's a big question mark. What's your take?
Yeah, good morning, Nigel. Yes, you're right. And it was absolutely great to be part of that SME meet. And then just to kind of add to what you mentioned, I think investor interest is getting very well defined. So there are people, a set of investors who are interested in microcap. There are people who are invested in momentum, and everybody has their share in terms of the rewards. So wise investing, wise trading is certainly helping on that, and I hope that continues. Specifically on these two names that you mentioned, my sense is, I'll take JP first. It's certainly tricky, and it's something which is only going to help repay all those, it's a messy balance sheet, right? I mean, we all know about this, and all these, divestments and sell-offs which they have to undertake are a compulsion. There is nothing in terms of value unlocking here that people should rejoice. It is something which you could get trapped into given the news flow, and we've seen this happen in a lot of these beleaguered names even earlier. And people think that this is going to be the end of all the woes, but it's too little too late. It's not going to change the dimension for the overall stock. And if you own the stock and if you get a bump up like this, on the back of some news like this, you probably could move out, but you'll have to review how things go before taking any decision in terms of adding to it. Suzlon is another kettle of fish. So what's happening there, Nigel, is you have a company that's finally getting its act together on just basic good old business. All those adventures that they have, the misadventures in terms of diversifying a bit too far, they've reversed that, and then there are a lot of things which they've started doing in terms of focusing only on their core wind expertise. And therein, there is a very decent order book, and there's a very good feedback that we get from companies that are into EPC and balance of plant and all, which do a lot of business with Suzlon. So it's a clear indication that this is renewables and wind energy particularly. And remember, wind energy is the largest contributor in renewables in the US, which is not the case in India as yet. And we've been too probably, driven by the solar growth. But wind also has its place under the sun, literally, figuratively, and you would be able to see Suzlon grow. The only caveat there is that this capital restructuring, the rights issue and all, is very essential for them to just survive and go ahead in terms of being able to execute. Interesting point to note, Nigel, will be if there is participation in the rights issue from people outside, if the existing shareholders renounce and you have a new set of investor that possibly comes in. That will be very interesting.
Yeah, no, absolutely. I mean, but the bigger point, if you step back a little bit, is that, if you see if the market is like a buffet, a lunch buffet, I mean, do you want to go to the end of the line to pick up, names like JP and Suzlon, or you want to start, with the good stuff, which is, by the way, at a discount, at a big discount. So that's the slightly bigger picture view you always must keep in mind when you're analyzing, especially, some names like these. Of course, things could turn, but, the wait for turn could be long. Prakash, hi, good morning. Just a quick point on, I mean, I don't know if you looked at Bandhan Bank's quarterly updates or, some of the others which have come through. But Bandhan specifically, yeah.
Yeah. Good morning, Prashant. So, Bandhan has, I don't know, it now seems to be a case of flatter to deceive. Every time there's an improved metric that gets shared, very soon the next quarter you have something coming and that reverses the entire sentiment and, expectation from the business. It's a very difficult business. It's not a business that's easy in terms of being able to grow as well as manage those collections. And this is exactly what I think, in spite of the metrics on efficiencies, collection efficiency being high, there are always challenges, right, to growth. So my sense is, while the metrics are encouraging, I would still stay away from some of these SFBs and particularly the MFI-driven SFBs. So it's far better reliable to get into housing finance companies. There are so many. I mean, you have a sleepy giant like LIC Housing or a PNB Housing that is still waiting to be awakened of sorts. If Canfin has its own share of problems. So my favorite pocket in the NBFC space is not gold financing, not SFBs or MFIs, but it's actually housing finance companies. So I feel Bandhan, the updates that you get still don't give you that conviction of the need to give premium valuations at this point in time to a business like this.
Right, Prakash, I request you to hang on. We're coming back to you, but listen to this interesting conversation we're going to have with the management of Kirloskar Ferris. Remember, the stock has almost moved to a 52-week high, or it hit a 52-week high a couple of days back, while the metal index is still under some pressure.